Good afternoon. This is Sean Golding with Golding & Golding, here to discuss the quiet disclosure, what it is, and why you shouldn't do it. So before we discuss the quiet disclosure, let's discuss the basics of offshore voluntary disclosure. With offshore voluntary disclosure, a person is getting into compliance for prior year, unreported, offshore, foreign, international, the IRS uses those words interchangeably, income, assets, accounts, and investments. The IRS developed various amnesty programs, which we can go through in a little bit, to describe what someone can do when they're out of compliance and they want to get into compliance. The main problem becomes when people start jumping into one rabbit hole after the next. So you Google online, you look up voluntary disclosure, and a bunch of fear-mongering, scare-mongering articles come out. Now, those articles don't tell you that under the Streamlined program, all those penalties are dwindled down to a 5% penalty or even a penalty waiver if you qualify for Streamlined Foreign. Rather, these practitioners, they shout online terms like prison, jail, $500,000 fine, things like that. So most of the time, that's not going to be applicable. It's the rare case where someone contacts us with a criminal FBAR situation. So what happens if you decide you don't want to go the traditional offshore voluntary disclosure route and you want to do a quiet disclosure? So what happens is each year, individuals, let's just focus on individuals, even though it can include estates, trusts, certain entities, things like that. So when a person has foreign accounts, assets, or investments, primarily, there's various informational returns they may have to file. The common terms you may hear is FBAR or FATCA, which is Form 8938. There's also Form 3520A for foreign trusts and Form 5471 for foreign corporations and Form 8865 for foreign partnerships, etc., etc. Instead of going back and using one of these programs, the filer does one of two things. Excuse me. Either goes back and mass files informational returns and tax returns for prior years, or starts filing forward from the present year going forward. Neither one of these are acceptable to the IRS. And one thing the IRS has said is if they catch you doing this, it's a form of tax fraud. It may lead to an IRS special agent investigation, which could lead to a criminal investigation. So quiet disclosure is generally not the best way to go. We've had clients come to us after they've done a quiet disclosure, and either they got hit with some monstrous penalty or two special agents knocked on their door wanting to inquire about some of their foreign accounts and assets. So it's really something that's not advisable. Instead, you should consider the different voluntary disclosure options, and there's several of them. The traditional one is the Voluntary Disclosure Program. For several years, they had an offshoot specifically for offshore-related activities, and that was called OVDP, which stands for Offshore Voluntary Disclosure Program. That program started in 2009, OVDI. Instead of program, it was called initiative. It changed a few times over the years, and it was closed in September 2018. About 4 to 6 months later, the IRS introduced an expanded traditional voluntary disclosure program that went into more detail about the different reporting, the penalties, and those aspects regarding if you have offshore accounts, assets, and investments. Because when OVDP was in place, the traditional voluntary disclosure was primarily for domestic-related activities. In addition, two very common and popular programs are the Streamlined Filing Compliance Procedures, which are broken down into the Streamlined Domestic Offshore Procedures, Streamlined Foreign Offshore Procedures. Both procedures are used to report foreign accounts, assets, and investments. The difference is Streamlined Domestic is for non-foreign residents, Streamlined Foreign is for foreign residents. Many people who are in this predicament live outside of the United States, whether they're an accidental American or an intentional expatriate. With the Streamlined Foreign program, not only can you file original tax returns under that program, but you have a full penalty waiver. So, whether you make a lot of money or a little money, you live outside of the United States, maybe you qualify for the foreign earned income exclusion, maybe you qualify for a foreign tax credit. First, you could file the original returns without having to secretly file them or amend them if they were incorrect. Second, complete penalty waiver. So all those absurd fear-mongering articles you read about regarding 50% willful penalties and $10,000 per occurrence per year, per occurrence per year penalty, those are all waived under the streamlined form. In addition, if the taxpayer qualifies for something like the foreign earned income exclusion or the foreign tax credit, at the end of the day, they may not even have any tax liability. So there are, plenty of people we have worked with, at least a few hundred, where at the end of the day, they had no tax liability and no penalty. If you don't qualify for streamlined domestic or foreign for one reason or another, but you're still non-willful, there's other alternatives. There's a delinquent international information return submission procedures. There's a delinquent FBAR submission procedures if FBAR is your only issue, and there's always a reasonable cause alternative. This was an introduction to quiet disclosure. We have several resources available on our website. Our main website is goldinglawyers.com. Sister website is IRSstreamlineprocedures.com, which is dedicated solely to the streamlined procedures. That's how popular it is. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.